Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
I've been running this real estate meetup called Thrive REIA for years and years and years. It used to be in person, and then obviously COVID hit. Ty's been coming to my events, and he's been one of the speakers at my events many times. And we have a great base of people. But then Ty said we should start doing online events because nobody can leave their house. And I said that's a great idea. And then I thought I knew Ty, but then I realized how great of connections Ty has, and he used to be a coach, and just finding out all this stuff and how much value I didn't know was out there with him. And then we kept on doing these live events, and we're just bringing on powerhouses, and we talk about real estate investing. We talk about real estate investing, and we also talk about sales and prospecting. And Ty's brought more of the real estate agent investor appetite on. And I think today is going to be great because we've got top producing real estate professionals here, which we can kind of dive in and ask a lot of questions. And I know just being in some of your masterminds, the high level you guys bring and the tools you guys use, I mean, it made me feel really insecure how my business is not really evolved where it should be. So I think it's going to be an exciting call. I'm going to let Ty take it from here and do all the introductions.
Right on. Thank you, Beau. So a couple things, guys. This is an exciting meetup. I've been really excited and really holding this back. So today, what's great about today is these are guys that the way I describe them is guys that I grew up in the business with. So all really dear, lifelong friends of mine. Guys that I've known for 20, 25 plus years. And so what I'm going to do is I'm going to just say their names really quick, and then I'm going to just call out, and then you guys will just do kind of your own bio rather than me try to bio. I'm going to have you guys do your own 3-minute, 2-minute bio. Today's theme, what we're going to do today is a couple things. Now, my good friend Joe DeRaphael is a real estate agent, broker. He's in the state of Nevada, Las Vegas. Guy's a high-level producer, but beyond that, he does some other incredible things. He's going to talk about what he's been doing in real estate development and investing. We've got my good friend Alex Lear. Alex Lear is from Silicon Valley here in California. Works the entire Bay Area. One of the sharpest guys I know. When I was brand new in real estate, I met Alex at a Mike Ferry event. And what was cool is I met Alex and I'm like, man, I'm latching on to this guy because this guy's smart. He's been doing it at a high level for a long time. And somebody that I've always looked up to at a very high level. So thank you, Alex, for being here. And then our third is Mr. Jeff Quinn. Jeff is a master of time management. No, I'm just kidding. So
yeah, baby.
Jeff is in the East Coast. He's in Ocean City, New Jersey. He is repping the East Coast. I don't know. Have we had a guest? We've had one other guest, Beau, from the East Coast, right?
I don't think we've had anybody from Jersey though.
Nobody from Jersey. We had a guy, your friend from from Virginia, who's incredible, by the way.
Jim Ingersoll.
Yeah. So Jeff Quinton's here. He's from the East Coast. The guy he represents real estate at a high level. Beyond being a top producing salesperson, this guy is also a master investor, does some really cool stuff on the investment side. I'm going to have him tell his own story. And actually, Jeff, why don't you go ahead and just give the audience your short bio, 2, 3, 4 minutes, and tell us about yourself and what you're up to.
Sure. No, thank you very much, guys. Thanks, Beau. Thanks, Ty, for having me. And got our homies on here, Joe D and Alex. Glad to be here. So thank you. So I live and work in Ocean City, New Jersey. I've been in the business since 92. So I don't know how long that is, 20, 29 years now. And I run a real estate team here in Southern New Jersey, and we've expanded in other markets. I have another existing real estate business and team in the Outer Banks that has about 20 agents down. Outer Banks is in North Carolina. So we've expanded in other markets outside of our home base market. We primarily, our home business is involved in a secondary resort vacation market. So we deal with a lot of investors we sell to. And then in addition to that, I've done a whole lot of development over the years, mostly new construction. And what we develop is basically two-unit duplexes. So we'll build a duplex and we'll sell each unit off separately. And then some is a two-unit condo. So that's primarily what I've done. And I've done, other things. And I've owned a couple commercial retail storefronts. I have a 7-unit strip center, a couple single-family homes, things like that. But I enjoy, teaching and inspiring the team and helping them grow, and also investing in other businesses. So I like to be a silent partner and bring the capital and be able to create multiple streams of income through leverage without me actually having to do it, but have my money work for me.
Love it, Jeff. Thank you for being on here with us. We're going to come back and you're going to tell us more about it. Let's go to Alex. Alex, tell us about yourself.
I started in the real estate industry. I'm in the Silicon Valley market. I run a family-run business where we have my 4 kids, my wife, assistants that all assist us in building a productive business. And so it's conventional retail brokerage, but on the investment side, I've done everything from 7,000 acre developments, to mid-sized developments, commercial building, acquiring units, losing a lot of them, 08, taking that ride. So, there's been so many iterations, and the nice part is I've been doing it now. It's coming up on 36 years. Started, when I was 19, and then it's about a little over 2,500 properties later. I think I'm coming up on like 2,800 properties later. So it's still a fun game. It's grown up Monopoly. So every day I wake up like, wow.
I love it. And so too, big or small, you sell them all. What are your price points, and kind of describe. I think that's an interesting little sidebar. But what are your price points like, and the range? I think is impressive, and it's interesting for sure.
Well, and to that point is our clients are everybody from billionaires to beginners, literally. So it could be somebody that's a first time buyer and they're trying to figure out how to buy their first house that's going to cost $1 million, all the way on up to somebody that's going to be buying deploying capital for investment properties, or deploying capital on a $5, $10, $15 million home. So it's such an eclectic audience. It's a fun game. So we see it all, everybody from high tech, biotech, financial services, and healthcare. Those are the 4 core drivers in our market. So we're working a lot with them. And then a lot of people that are transitioning out, because as Beau said earlier, in our market, 7 out of every 10 people are leaving the area. So we're seeing them take a railroad right now. If I could build a railroad to Texas, to Nevada, Arizona, they're running out of California as quick as we can. And the last thing I just read this morning is Elon Musk is about to build a train to take Tesla out of here, and 10,000 jobs out of here too. So it's going to be an interesting game as we play in the future.
I love it. Thank you for being here, and we're going to circle back to that part of the conversation as well.
Sure.
Joe D.
What up? Just making a note, 7 out of 10 are fleeing San Francisco. I know where to kind of turn my focus here. Pick up 7 of those people. That'll be all right. I've been involved in the real estate business since 1994. I've done all facets, obviously represented a lot of clients on buying and selling. We're well over 3,000 homes sold, done fix and flips. I've got a small portfolio of properties of my own. We do fully furnished rentals. I do traditional rentals. I've got some ground up developments that we're doing right now. Also invested in other areas, invested in stocks. I've got equity investments in projects and other businesses.
Love it, Joe. We're going to come back and we're going to talk more about some of the development stuff you're doing, and then even some diversification. I think you've got some great some thoughts there. So we're going to come back to you. So Jeff, let's talk about with investors right now, what's going on in the East Coast, and what are you seeing in the market, and your own personal point of view in 2020. Right now, we're in the middle of June, COVID. Obviously, New Jersey's been hit hard. What are you seeing right now, and where do you see the market? Where do you see opportunities, and what's kind of your point of view?
Well, it's hard to say. I mean, I think that what we all expected during COVID, for the immediate impact hasn't ultimately happened here. I mean, had a very strong market coming into this prior to COVID, and I'll call it BC, right? So before COVID, and then during COVID, there was some slight panic in the beginning, and yet now things have started to open up. The market's on fire right now. So we didn't have a lot of inventory. We currently still don't have a lot of inventory. We're down in most markets about 30 to 40%, and there's still a ton of pent up demand. So we're still seeing it's a seller's market. We're seeing multiple bids. We know that right now it's probably 3 to 1 for every home that's priced really well in a good location with good condition. We might get 3 offers on it. And so it's a very, very strong market. So, it's interesting because we are sharing with our sellers and investors that all of those people that have been waiting and holding on and wanting to sell, and I'm going to wait for the market to get better. There's not a better time to sell right now. So if you've got cash right now, you've got a shit ton of equity out there. I mean, we're telling our sellers right now that, you've been waiting for this moment. This is the time. I don't know how long it's going to last. It might last 60 days, 90 days. I don't know. I look at the market and say, okay, what's going to happen? Well, I guess 2 things are going to happen. One is as COVID lessens, let's say, then the market's going to stabilize, and I think we're still going to have a healthy, good market. If COVID comes back, which some states are starting to see this, then I think we're going to see a market where it's going to be a yo-yo effect. It's going to be great and then terrible and then great, and then it's going to be up and down. Like there's going to be weeks, depending on what the message is from the governors, nothing's going to sell, or there's going to be fear, and there's going to be weeks and things get back open again, and they all come flooded back in, right? Kind of what we've seen. So anyway, I guess on the investor side, we're talking about the sellers selling right now at an opportunity, taking the cash, waiting for other opportunity, which, guys, 15, 20, 25% unemployment rate, at some point, we're going to feel that. There's going to be opportunity out there in things, somewhere, some way. We may not see it right now, but you got to have cash, right? So, waiting on the cash. Buyer side, what an opportunity right now with interest rates being as low as they are, right? There's still deals being made. But, if it's a buy and hold, who really cares what the market's going to do in the next 6 months, 12 months, 24 months? Okay. So it's a mixture right now. New construction, we can't get lots. Like we can't get enough property. If we got new construction, it sells pre-sale. So new construction is hot, which also drives the resale market, right? But the problem is that if I don't have new construction for somebody to upgrade to, it becomes a challenge, because most of our new construction is somebody that's going to sell something they exist and upgrade to something, right? So anyway, I think it's a very healthy market. I would just also still like any market, be in a good cash position to take advantage. And there's going to be opportunity out there. We just may not be now, but there will be.
Got it. Love it. And I completely, we're seeing that in our market as well, in Northern California and the East Bay, and even into Sacramento. Low inventory is driving the market. And I think, to your point, for investors, if you have a long horizon, because money is so cheap, because interest rates are so low, it does make sense to buy right now for the right deal and the right opportunity. So I would completely agree with you, Jeff. Spot on, man. Spot on. We're going to go to Alex. Alex, again, same question. You're in Silicon Valley, which, again, everybody's markets are a little different. I think you're in a very, very unique market because of the price points and the economics of tech and biotech. What are you seeing right now in Silicon Valley or in the Bay Area? And to that question, kind of where we're at today, and even short term or even midterm, how do you see going forward?
Well, and the question is one that we're all waking up every day, scratching our head, figuring out, okay, which way is the tide going to turn, or is it? Right now, it's kind of a slack tide. It's just starting to get motion again. So we're really trying to decide. But what I've really come to the conclusion is it really depends on the asset class. Because if you're looking at a commercial retail sector, that sector is going to get the shit kicked out of it. It's there's the damage has not even begun to really hit that sector yet. So from a commercial retail sector, restaurants, that's one area, but from a commercial office space sector as well. I look at that in that asset class and I go, well, based on the article I read in The Economist probably about 3-4 years ago, it said the disruption to Silicon Valley would be the technology that they created themselves. And because it allowed us to be able to work anywhere. And right now we're having this conversation on the technology that was created here that COVID now has accelerated to where people realize you no longer need to be here. So that will be the downfall. And I don't want to say a downfall, but that will create a compression effect on our real estate markets. And in different price points, it'll have a different effect. Above the median, we're seeing compression already occurring. We're seeing days on market a little longer. Below the median, the market's pretty active, pretty vibrant. Overall, though, our inventory is still really, really good. I mean, when I say good, meaning that it's still relatively tight. And in my town in San Carlos, where my office is located, and I own the building here as well. This town right now, 25 total properties on the market, 18 pending. So we got slightly over a month of supply, if you really look at those numbers. So I mean, these are still really, really tight numbers. But there's, as I'm watching the NODs, I'm watching for friction in the future. I think we'll start to see it more in the apartments and in the apartment class as these rents start to get prolonged. The calls I'm getting from clients now, we sold one in an apartment building last year. He's like, look, based on COVID, I got to get out from under this thing. I just don't want to have any part of this. With because legislatively, we're going to start putting more restrictions and more burden on owners. The last aspect of that, the other reason why I see commercial having some real challenges ahead, they're trying to, on the ballot in November, they want to increase the property taxes on all commercial as a ballot measure. You're already raising all the taxes on employment. You're raising everything under the sun. And now you're going to raise the taxes on commercial. If you guys ever, in every other market, you will be catching all of our businesses running out of the state. There's a point where people finally go, look it, why do we even want to be here? So those are the headwinds that I see, but commercial will ultimately drive the residential. It's going to be, I'm trying to forecast every 90 days now, not 6 months out. I got to really take the optics every 90 days. So sorry for the long-winded answer there.
No, that was a great answer. And it was very appropriate. Very, very great answer. It's interesting too, Alex, that the whole ballot initiative, the other thing that's interesting, again, here in California, the ballot initiative, they're disguising it. And I think the title of the ballot initiative is something like improvement for schools and parks and city community services. And it doesn't even look like it doesn't really even talk that much. It doesn't really specify that we're raising property taxes. And again, that's all getting passed through to the consumer ultimately, as well as people leaving. So great point. Great points all the way around. Thank you. So also too, what I want to share is for anybody who's watching, I know we have a group, some of the different masterminds, and then people that are tuning in. I would encourage you, if you have a question, Beau, how do they submit questions, Beau?
Just you can put them right in the chat on Facebook if you're watching it in Facebook, and you can also text Ty your questions too if for some reason we're missing it, if it's in a Facebook post that we don't see. So Ty, what's your cell phone?
Yeah, there we go. It's 1-800-CALL-BEAU. Yeah, so I love it. So so just post your questions. So the questions will come in. What's cool is Beau will tee it up too, so we'll get to showcase you and we'll give you a shout out too, especially so a lot of our friends, people from masterminds and such, we want to shout you guys out. So please ask good questions. Would love to get you guys interacting. I'm going to go to Joe. The same question, Joe. Obviously, you're in the state of Nevada, gaming. Las Vegas is a completely different marketplace. A lot of changes. We were out there, I don't know, whatever it was, a couple weeks ago. Could definitely see some changes. There's definitely going to be some economic impact. What do you see going on in Southern Nevada right now, and kind of how you see real estate, and specifically right now, how investors pivot or just thought processes going forward?
So, I mean, there's a lot of aspects to that question. So, I'll break it down first with the general market. We've got limited inventory. In fact, most properties, 3 of the last 4 properties I put for sale, all had multiple listings, all selling over asking. So really, really strong demand there. We're seeing a lot of the 7 out of 10 that Alex was talking about. I think 40% of our buyers right now are coming out of California. And I don't anticipate that to change. As far as the economics, we've got our biggest driver is still the Strip. We have over 600,000 people are employed in and around supporting the Strip industry. Obviously, there's a big impact there with the number of people that are not working. Yes, we have opened up casinos, but we're not opened up at a full scale. So we're going to find out probably in the next 60 days who actually still has a job and who doesn't. There's a lot of still some mystery out there. There are some casinos that have already let people know, you're not coming back, so start looking around. I think the PPP money, as well as the inflated unemployment checks that are coming in, have been keeping people at bay. So our inventory has been real low because of it. But I think as those things start to run out, the companies that were getting PPP to keep employees on are going to start terminating because there's no reason for them to keep them any longer. And then I think the unemployment stuff, as it works itself out, I think Jeff was talking about the amount of liquidity in the market. We're fortunate. There's a lot of equity in the market. And I think people will start making decisions on, hey, I'm not making up my back payments that I haven't had to make. I'm going to sell, take my money, go somewhere else. So I expect to see an increase in inventory. I will say I think commercial office space is going to get hit pretty hard here. I also have been following a lot of the big companies that are strategically declaring bankruptcy, and a lot of them are doing it to break bad leases or not sustainable, affordable leases, and they're going to move some of their business models to a Amazon type platform where they'll be more of an online retailer because they're realizing they're just getting crushed on the retail stuff. So from an investment standpoint on the retail sector right now, I would hold off on that.
Okay. Love it, man. Love it. So let me turn it over to Beau. Beau, do we have some questions flowing?
Yeah. So here's a question for Joe, since it's Las Vegas. So are you anticipating in 5-6 months, are you anticipating kind of a little bit of a price adjustment, downward pressure, or do you think that the inventory is still going to stay relatively low where it's not really going to affect prices?
If our market just relied on local market movement, absolutely, I would say without question. But the fact that 40% of our buyers come from a state where properties are double the value, I think that we're just going to see a lot of the people here, their properties get absorbed by people that are coming here from more expensive states, whether it be more expensive in terms of cost of living, the housing, or the tax structure. I do expect to see an uptick in inventory, but I don't expect, if we give anything back, it might be 2%, 3% at best. Honestly, I think most people that are buying more longer term. If you're a flipper, you need to buy it right anyway, so it doesn't really matter. You can buy like you would have last summer, where you might have paid a little bit, more of a premium just to have something to do. I think we got to be just a little bit cautious in that area.
Sure. And this would be a question for all of you too. Since we have a lot of investors that listen to this, but also a lot of investor agents that are kind of, starting out, they're not as seasoned or weathered as you guys probably. They've been, they're probably 5 to 10 years in, or less than 5 years, let's say. And I think a common, problem a lot of people in real estate, they become too transaction based. Can you kind of talk about how you created your systems to get you where you're not just in this rat race where you make a sale and then you got to go make another sale? How'd you what was the turning point really to get you to the next level where you were able to really build a team and grow it? Alex, start with that, and then Jeff.
Initially, it's been so long ago that I did that, but basically what it was first it started off as, when you realize that most agents go out, get a deal, they work the deal, they're so busy doing the deal, they have no more deals. So they got to run out, work out, go get another deal, work the deal. And so they figure out that what I figured out was that cycle wasn't going to work for me long term. So I started trying to study who were the people that had worked through those cycles. So that's where I came in contact with Mike Ferry and started understanding systems and assistants and where to hire people to do jobs that it didn't pay for me to do, and then develop the team around that. But before I even got to that point, we were just talking about that yesterday with my team here, is I went out to every one of the vendors that we ever spent a dime with or that we ever referred business, and I brought them all into my office. And I had them all introduce each other to them, introduce them all to each other and amongst themselves. And my job was to make them all to work together and keep me out of the loop. So it allowed me to do more of what I did before I could ever put them on to pay. And as Tom Ferry always says, you use sweat equity before check equity. So I used their sweat amongst themselves before I could afford to hire my own assistants. So I got momentum into my business before I started hiring in the people that now compounded that momentum. So that was the initial transition. And if I can digress for one last thing, if I can digress for 1 second,
Sure.
One thing Joe said that was critical in his market, if you heard him say, the people that are moving out of the area into his market are displacing those that normally would have rebought. So now they won't even know that the prices are higher because it feels like such a contrast. They're coming in going, man, Vegas is on sale. I'll take 2, I'll take 3. How many can I get? Conversely speaking, in Silicon Valley, Asian, Indian, and European are people that were infilling all the people leaving the area. COVID and now visa restrictions, I'm wondering who's going to refill our market and subsequently how that's going to impact our long term. So that's something to keep an eye on. Keep watching the governmental regulations as well and those changes, because that's going to have a real impact, especially in a market where we hire a lot of engineers and people, with propeller heads. So you got to make sure you figure out where they're coming from. So that's a sidebar.
Okay, Jeff, if we could go to you, same question, if you remember it.
I think so. So I guess about, how do you build some leverage and so forth. So first you got to earn the right to start before you can start to hire someone. So, you got to do the work yourself. I see a lot of agents today, they want to start a real estate team and they did 10 deals. Next thing you know, they want to hire, 15 buyers agents because they think that they should go out and just hire people and surround people around them. The reality is that you want to add somebody to your team if you're going to build a team. One person, basically admin side, about every 30, 35 transactions. First thing it is, you need to go out and do it yourself, right? So you're a solo agent, you're doing the grind, you're doing that. But once you have an overflow of leads that you can't keep up with, many times it's going to be on the buy side. Then you can start to leverage a little bit on the buy side by referring it out to another agent. But the reality is you want to start out with an executive assistant, somebody that can earn the right to become an assistant executive. Okay, like they want to be in your role for a long time, becomes an executive assistant of yours. And one of the exercises I tell people, if everybody wants to write this down, is you take basically a horizontal line, you build a cross or a plus sign. Okay, horizontal line on the paper, and then a line going across. So it looks like an X, right? So you have 4 quadrants. In the left corner up top, write more of. In the left corner below, write less of. In the right corner above, write start doing. And at the bottom, write stop doing. So you have more of, less of, start, and stop. And so now what you want to do is start to look at and say, okay, what exactly do I want to do? What do I want to do more of? Well, I want to do more lead generation or more prospecting. I want to go more appointments. All I want to do is just meet with people because that's what I got in this job for doing, right? Whatever it is for you want to do, you write down more of. And then you write below that less of. All right, well, what do I do less of? Well, I really don't want to have to call my sellers every single week. I really don't want to put a sign up anymore and put lock boxes on because I'm running around and it's just a waste of time. So now I put less of. All right, now at the top or the right, you say, okay, what do I want to start doing? Right now, I really want to start building a system that I can communicate to my database on a regular basis through automation or whatever that may be. I want to start working on my business, and here's some items I want to do. Below that is less of, right? Or no, I'm sorry, it's stop doing, okay? And stop doing is like, you know what? I'm going to draw a line in the sand, and I am just never, ever going to do this ever again in my business. And that might be something like typing a contract. Like, I hate typing contracts. I can't even type, right? So I'm never going to do that ever again. So now I've got my more of, my less of, my start and stops. Well, all of a sudden, take your less of and your stop. That right there becomes the job description for your hire. Right there, just all those things, and say.
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
I don't want to do this anymore. Right? I'm going to stop doing this. I want to do less of this shit. And right there is kind of my job description for you. Figure out how to take this off my plate. So now I can work on my more ofs and be working on the business to start. Okay. That becomes my job description. And all of a sudden you'll see your production go up. And then you make your first hire based upon those total clients.
That was honestly like the best thing I've heard in a long time. Like no joke. I was thinking, okay, he's gonna Robert Kiyosaki me, but honestly, that's like the Robert Kiyosaki of like leverage right there. And the quadrant. I mean, seriously, that is money right there. I don't give that many compliments that often, and I have to say that's probably one of the best piece of advice I've in a long time, because this really applies to me. So that's why I'm excited. I'm like, okay.
Yeah, it applies to any business, by the way, or anybody, anything, whatever it is you want to do to leverage something off of your plate.
Yes.
Right? And by the way, we do this all the time with agents. Agents will come to me and they're saying, I'm bogged down right now. I can't get to the next level. I'm selling 24 homes. I want to get to 48. Great. Let's do the quadrants. What do you want to do more of? Well, what do you want to do less of? What have you always wanted to do and start doing I can't do? And I want to work on this. That becomes a job description for somebody else. Or can we outsource that to someone or go to a VA, or it doesn't matter. We just got to get it away from somebody that only wants to spend doing what they know what's most productive. And that's usually going to be in the more of and start.
Yeah, this is perfect.
Solid, Jeff. Love it.
Joe, you want to?
You're so smart.
Yeah.
Me neither. I stole that from somebody else. I didn't make that shit up. I mean, I stole it from somebody.
But it's interesting is I just had this conversation with my staff the other day as we sat down and I wrote down, I'm not doing any of these things anymore. You guys figure out who's going to handle it, but it has to get done. And it's absolutely liberating. And in fact, in my development deals with my partners, we just had a meeting this morning and they were starting to pull me into things that they're, number one, they're not my strengths. And number two, I'm not excited about them. And I just said to them, I go, I'm not going to do those. And I'm not saying that because I'm a jerk. I'm saying you guys want me to spend my time doing this over here. This is what I'm best at. This is what I get excited for. And this is what neither one of you can do at the level I can do. So let's keep me there. How do we need to get these things handled otherwise? And I think in growing any business, whether you're an investor or otherwise, at the end of the day, you got to take a look and say, where's the best return on your time? Where are you putting the most amount of energy where you get the most return? And just focus on those things primarily.
I love that. Yeah. I mean, so let's go back because I'm getting a lot of good, I'm being selfish now, but I'm getting a lot of good information. So,
it's turned into a coaching call for Beau, I think. I don't know.
So,
cool, by the way.
So hiring your first executive assistant, what's like the one piece, it could be an app, it could be software that is a game changer, was a game changer for each of you that you use? Maybe it's a CRM system or can you kind of talk on that? Like what's really kind of 10x your business from an app kind of perspective, and give a little bit of background, if anything.
I'm gonna jump in on this because I'm gonna go a different route on your answer. An app is not the answer. It's a piece of the puzzle. It's your mind. That's the app that you need to work on. This is where you need to spend your time. If an app is just a tool, no different than a hammer or a screwdriver, but if you don't know that you need to use it, there's a problem. And I know for me, early in my business, and even the way I managed my investment properties, again, I'm really clear on the things I'm willing to do. If there's a problem with the property, I'm not going out to look at it. I know people who are going to go out and solve that problem. But I have people that buy investment properties are like, oh my God, I'm so slammed with problems all the time. Like, because you're the guy over there trying to fix something you're not good at. But what I'll do is I'll send a plumber a ton of business. And when I get a call, something's going wrong, I call the plumber and say, I need a favor. I need you to get over there and fix that. No problem. They're on their way. So to me, I think it's train your mind as to what you're willing and not willing to do and be real clear at sticking your guns to that.
I want to pause too that with Joe. One of the things that Joe said back to back is he's talking about identifying your core strengths. And what are your true gifts and things that you're really good at and things that you enjoy, things you accelerate at. And that's what I think that's a really, really critical point for anybody watching this in life, regardless of what you're doing, whether it's investing, developing, if you're a salesperson, a lender, whatever. It's like you have to press your strengths and really focus and stay in that lane, and then obviously hire around it, get help around things that are not your strength. And that's a really, really big point, Joe. Thank you for that. Keep going, Beau. No, let's go to the question.
I'll just add something in. And by the way, earlier today I was doing the quadrant thing. I'm like, horizontal, that's vertical. No one caught me here, right? Horizontal.
I heard you. I was laughing.
I'm like, what?
You're dancing.
I just like when you said
you're from Jersey.
I go,
it's Jersey.
X?
It's a Jersey vertical.
Yeah, that's right. Sideways. So Beau, here's my app, man. This is it right here. It's like 2 turntables and a microphone. It's two headsets, right? It's the app of communication. Because I think if you learn how to sell through communication, that's your app. No matter what business you're in, if you're looking for a deal, if you're selling a deal, if you're prospecting, if you're going on appointments, you're presenting, whatever it may be. I mean, I don't think there's any one specific app or system or CRM that I can say has been a game changer for us. It's enhanced our business. It's made our life easier with leverage, but it's also made us I would say, a crutch or lazy too, right? Too many of us are now looking at it and saying, oh, I can let this do this automation for me, or I can do that, rather than me picking the phone up and actually having a two-way real conversation. Okay. Mm-hmm. So, that's the app of communication, of being able to speak to somebody in an influential way to move them along to a decision. And I would say that would be for me. I don't know if that's what you're looking for, but that's what came to mind.
Mm-hmm. And to add to that as well, the more technology, the one thing we've all got to remember is this: the more that technology increases, Tony Robbins always says this, business moves at the speed of trust. And the more technology and the louder it gets, people are not hearing us anymore. So the trust level is actually dropping. So the ability to communicate effectively, I think, is becoming even a lost art that isn't a lost art, but if you can go out and master it. The guys that are on this call have all been fortunate enough to be around like Mike Ferry and some of the great communicators that have forced us to really, 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 really go out and make contacts and connect with people every day. Because you can have 100 apps, but when you go out and talk to those people, if you verbally vomit on them, 1 out of every 1,000 will love vomit, and you'll get 1 out of every 1,000. But if you have the ability, like Joe or like Jeff was saying, like Robert Cialdini talks about the book in his book Persuasion, the ability to influence and help guide people and help unlock them from their own chains. That's where the gift is. And no app can stop it. No market can stop it. There's nothing that can stop it. And everybody trying to sell us snake oil, they get stopped because we have the skill set that nobody else can replace. And that's the one thing that I would recommend to everybody on this call is really, 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 really master your interpersonal skills, your EQ, and make sure that you're really, really cued in on that and apply that at a high level, along with all the rest of the technologies.
Spot on, Alex. Spot on all the way around, Joe, Jeff. It's interesting. We were in another mastermind group, and they were talking about empathy, and then we were talking about like hustle and grind and that, and it was kind of like, I think just what you were saying about business moving at the speed of trust, and then also the fact that we become too dependent on the application or the technology as a crutch, and it actually dilutes the interpersonal communication, that we become so much about the tech that we forget about the EQ, and what you just said. All three of you said it in different ways, but really about that interpersonal, the EQ of being able to connect with somebody and really like get them and where they're at. So spot on, guys. So very well said. So shout out to Renee too, because she had a great point on. I can't pronounce Renee's last name. Is it Kirsch? So anyway, shout out to Renee because she had a really great point. We had a lot of young sales guys, different ages, but mostly a young group, and she made a very similar point. So shout out to Renee. Beau, keep going with the questions, bud. You're doing great.
Thank you. The next question. Let's see who this. Okay, so sorry, I was reading comments because for whatever reason, StreamYard sometimes if they don't opt in, we can't see who made the comment. So like this, somebody, I think it was Adrian actually, but they have to opt in to StreamYard, Ty. That's why sometimes they come in.
Yeah, we'll get that fixed for the next. I know for some reason the logistics of StreamYard and Facebook, but that's okay. Or just make some questions, Beau.
No, we have Adrian actually, but oops.
We're getting a little feedback now.
Okay, we're good now though.
More questions in the feed, or do you want me to?
No, I want to talk about Joe, and let's dive into some investing. So, like Joe, you started as an agent and you had no real estate experience as far as investing side, right? So that was 26 years ago. Can you kind of walk us through how you took your baby steps to start investing and like how that all came to be?
Yeah, I mean, I knew nothing about real estate as I got into real estate. Like I was broke college kid, working in restaurants and then got into real estate. And then I just started looking around and said, who are the people that have the best lives, right? And I started looking at the older real estate professionals, the guys that were on vacation all the time, the guys that were never stressed. And I started trying to figure out what they all had in common. And the one thing that I noticed is they all owned property. They all had cash flow coming in, whether they worked or not. And so, okay, I could get my head around that. Simply started with buying my first house that I lived in. And within 14 months, bought another house, moved out of the first one, turned that into a rental. It was that simple. It wasn't super complicated. I looked at it through the formula of it was going to produce income every month. The value was going to go up. Somebody else is paying it down. This is an easy decision. Within about 14 months after that, I did it again and then did it again. And then after a while, then I started saying, okay, I don't like moving all the time. So just started acquiring properties from people that were in distress. They needed to move. They needed cash quick. Did a lot of subject twos where we take over the payments and go that route. And then started the fix and flip. Ty was the guy who turned me on to the fix and flip world. He's like, hey, you got all these properties. He goes, but you're walking on deals that, your commission check might be 10 or 15 grand. He goes, but you can flip some of these, make 40, 50, 70 grand. And so I started looking through that lens and saying, okay, what does that look like? It's very, very basic and rudimentary. I think the thing that I appreciate most, the things that I've learned the most is when I'm around other people, and every one of the guys here on this panel have had a huge impact on my life professionally and financially, because we start mind sharing like we're doing right now and being in these conversations. And it's not a once in a blue moon. It became an addiction. Every week talking and finding out, Alex, what are you doing? Ty, what are you doing? Jeff, what's the new trend out there on the East Coast? And figuring out how can I interpret that into my market.
Yeah, I think as I study successful people more and more, it's a common trait that successful people usually mastermind. They usually have a core group of people they connect with daily, and they talk about their goals and their strategies. And so I realized that. I realized that writing your goals down, journaling and things like that actually really work. And I think a lot of people, I get a lot of value out of masterminding. And I often go to real estate investing events, not to learn about how to buy subject to, but to connect with people. And that's where you get the real value. So thank you for pointing that out. Jeff,
your net worth is in direct proportion to your network of people. Don't hang out on an island.
Love it. Jeff, can you kind of walk us through when you started in real estate, then your first kind of couple real estate, where the light bulb went off and you started saying, okay, I should be buying some real estate, and kind of walk us through that process?
Yeah, I mean, I guess the very first thing was, I bought my first home, right? And my first home itself, it wasn't even a home; it was a condo on the beach. And if you could just picture, basically, it looked like there's 2 units. It's actually 6 units on the beach, right? So it was a triplex, but there was two at the top, 2 in the middle, 2 at the bottom. And I bought the top unit to the left, and I think I paid like $92,000. It was 300 some square feet. It was a hotel room basically, but on the beach with one 6-foot slider that had a deck, and it was killer, right? Very, very small. It had like the little college, refrigerators. So what was interesting about it was I was able to get owner financing on this deal, but 20% down at the time. I was able to save up on it. I was early 20s when I bought it, and I lived in it, right? So I lived there, had it for a few years, and then I ended up selling it maybe 3 or 4 years later for $117,000. So immediately I was able to make some money on it, and then leverage that into another property that was able to get on the bay. I bought for $222,000, and then from there I was able to leverage and buy another property for $900,000, and flipped it to another one for $1.3 million, and from there went to $1.7 million, and it just kept going right all the way through. But it all started from that very first home that I bought, because it allowed me, number one, forced savings me to put money down. Number two, I was able to live in it, and I started earning a lot of income. So there was a benefit of being single and starting to earn some good money on the tax write-offs. I was paying a crap ton in taxes. So my accountant's like, you need to buy real estate. So one was understanding if you don't own a home, you need to own a home. There's studies out there between home ownership versus renters, and some of the millennials out there will debate you back and forth. I don't care what it is. I don't believe in that shit. I believe you got to own your own home you're in. It's a way that you're going to build equity, okay? And then you can use that to pull from to invest. There's so many more benefits, tax benefits and equity, number one. Number two, one of the first deals that I did was I partnered with 2 other of my buddy, father and son. And they both also sold real estate. And I actually dug the deal up. It was a duplex. And in our market, we sell each floor separately. But we were able to buy the duplex, and it needed about $150,000 worth of work. Today it would probably be $250,000, but needed a complete renovation. But what we did was we went in and bought the full duplex. We each partnered in. I think at the time we needed about $75,000, whatever it may be, 25 a partner, and then we went in, got some money from a bank, a construction loan, to finish the construction money of the renovation, and then sold them as condos. And we made about 90, maybe 100 grand in the total deal. But what was interesting is we each then took that money of profits and we kept it in that deal, and we went out and did another one. And then next time we did actually 2 at a time. And the rule of thumb was that we're never going to pull the money out. We're not even going to pull the money out on the gain of the taxes. We're going to pay the gain on the taxes of that income from our personal income, right? So we could have more equity and more capital to go do another deal. So that's how the very first deal I did. I didn't have enough money saved to be able to go out, so I partnered with people, and then we did a deal. And our goal was to do another one, but leave all the money in and then do another one, right? So that's how I got started, and then it just started to build from there.
And then Alex.
Along the same lines, there was a broker back when I started, and this guy, everybody looked up to him. He was at the board, and he was always like, when he spoke, everybody just stopped. It was like, what's he going to say? So the next thing you know, the first thing he says, everybody in real estate here, and this guy owned a lot of property. He says, I'm going to tell you one thing. You'll make a lot of money selling it. You'll only get wealthy owning it. And I was like, okay. So, and then the other thing, there was a local broker that had trained all those top 4 or 5 brokers in our market. And so I talked to her when I first got in the business, and she said, for every door there is a bell, the more you ring, the more you sell. So literally I went out, knocked on doors, and found my first deal. An old drunk guy, the house was loaded with termites. They had eaten through the floor into his bedpost, and literally his bed was falling. I mean, it was just cat shit on the wall. It was perfect. It was a perfect first time buyer house, right? You're just like, oh, this is the greatest. So I bought that son of a gun. And then next thing you know, and I was 20 or 21 at the time. So I bought the thing, and then I rehabbed it the whole bit. And then my wife and I later on moved into it when we were 23. So then fast forward, started buying more property, and then prospecting. I realized there was always a question sitting in my chest. Like when I was scared to ask a seller if they would sell it to me, that's when I had to ask. And it would be like, I'd be like, I didn't want to ask that question, but then I just started asking the question. Before you knew it, I met a guy, bought his duplex. He was leaving the area. Then I bought his fourplex, and I bought his other duplex, and I bought another duplex from him. I kept buying up his portfolio. He was owner financing everything. Then from there, one of those duplexes, I said, I don't want to keep it for a while. So I traded that into 640 acres I still own. So it just, the snowball just starts rolling out. But the one thing I can tell you is this. As we all grow, and when you're using a young person's or a new investor's mindset, the biggest mistake I made was not readjusting my risk for the amount of assets I had. And I kept taking too much risk for the amount of assets versus tapering off on the risk. Because when you're young, you got nothing to lose. You're like, push it all in. What's the difference? But as you start to grow, you want to start metering your risk to measure. So everything has to be exponential or the rewards have to outweigh the risk by 10 or else you don't even do the deal. So you just start getting more specific as to what you're willing to do. But early on, it was all numbers, knocking, meeting, just asking questions.
Awesome. Can we talk about, what do you guys think about real estate disruption as far as like these iBuyers? They went away, now they came back. And then, all the different kind of, brokerages and people trying to Uber the real estate industry. At the end of the day, it's still a person to belly type business. So I'm just kind of curious, do you think there'll ever be any disruption in this field? But because it seems like at the end of the day, people still need to sell something, right? People have to negotiate. So I'm just interested on the iBuyers first, and then the disruption in the broker world, and then you're seeing companies that coming out and they're like lending money to people so they can fix their houses and things like that. I'm just wondering your thoughts in general about the market and the brokerages out there. Joe?
So I think one thing that is absolutely going to be a constant, there's always an opportunity for disruption. That constant will never change. That'll never go away. Your ability to adapt and get out in front of it or work within it is going to determine your level of success. I don't care what the business is, whether it's real estate investing or sales. Somebody's always looking for a magic bullet to be able to make it easier, make it more efficient. Those things will disrupt for a short period of time, but everything always goes back to the mean. It's like the fancy workouts. Like you can buy this video and you can work out for 20 minutes and you're going to have this body. At the end of the day, you still have to eat right and you have to do it every single day. It's the same thing in real estate. If you're buying investment property, if you're a real estate agent looking for clients, you have to show up, know what the hell you're going to say, and you got to go talk to a lot of people every day. It's the same. It doesn't change. How you may get those leads might change. Like we can use more technology today, but I think it was Alex that said it earlier. If you don't know what you're going to say when that incoming lead comes in, or somebody registers themselves, or they respond via text, yes, I'm interested in selling. At that point, you better going to do.
Alex?
The thing about, I'm going to back up for a second here. As technology and any of those things come along, and there's going to be, all the disruption. About every 7 years, I stop and take my business and go, if I had to start it over today, what would it look like? Because there's always going to be a new magic bullet. There's always going to be somebody else coming in telling us how they're going to save us from ourselves. So you always got to be recreating and reinventing. So my dad said this to me many, many, many years ago. First thing, he goes, you want to know the only constant in life? And I'm like, yeah. He goes, you can bet on this every day of your life. I'm like, well, what is it? He goes, change. Every freaking day, change is the only thing that will occur. Other than that, you got to keep adapting. You got to keep modifying. You're going to have to keep evolving with it. So at this point, our job, my guys, I have 3 guys that knock on doors every day. Obviously, with COVID, we've adjusted, but they knock on doors. Their job is to be a practical psychologist, because there are people, there's hermits, there's people that are psychologically, emotionally, mentally just locked in their own kingdoms. They can't find their way out. Technology doesn't even have access to those people. So our ability to unlock them from their own prisons is where our practical psychology comes in. And if that's a niche that we've developed and most people never will, I don't really worry about technology.
Very good. And so here's a question. Like Ty's business model is he's got two caps. He's a investor and an agent. I'm curious on your other for you guys. Do you market to motivated sellers that are in foreclosure and stuff? Do you have like we'll pay cash marketing message that you also do with your real estate brokerage, or are you just kind of mostly focused on cookie cutter residential? Jeff?
Yeah, so I guess a couple of things. One, with regards to disruption, these disruptors are disrupting. There's no doubt. I mean, there's cities and marketplaces out there that the iBuyers have gotten 5, 10%, 15, 20% market share, especially like in the Phoenix and the Arizona, those type of markets. They're big players, and these guys are buying a ton of properties. They're flipping and they're getting them back on the market, and they're making very small portions, right? So if you're in a market like that, you need to align with those companies. They are disruptors. Now, the question that I always say is, what would be the business or what would be the disruptor that would be such that it would take you out of your business? Think about what is going to take you out of the business, and whatever that is, that's the business you need to start thinking about being in. Okay. So what
business are you thinking about being in if you were to be?
So, there's a couple things. I mean, just like the Ubers of the world, right? They took out the taxi cab business, right? The taxi cab business did not adjust. They could have been in that business. Okay. The Blockbuster video versus the Netflix, right? All of that. So, for me, I mean, there's several different things that I think about all the time when it comes to real estate is how can I disrupt in such a way that I can protect a consumer that would never lose money on their home ever? In other words, some of the fear that goes on in buying is, if I bought this house, what if the market goes down? How could I protect the downside? If you had the ability in the stock market to say, hey, listen, you can give me your money, I'm going to invest it, and you'll never lose money, would you invest it? If there's a guarantee, if there was a disruptor out there that could guarantee you that you would never lose money ever, right? Now, I don't know the answer to that, but in my mind starts to go there like, that would be a freaking disruptor. Would everybody in the world come to me if I could guarantee them they'll never lose money? Could I sell every single home in America if I could a guarantee out there, right? I don't know. I'm just giving you an example of a disrupting thought, okay, whatever that may be. So, we in our market, the iBuyers it isn't really big. However, we used to see it here and there. But what I've implemented is, if you go to my website, you go to QuinnGroup.com, right on the homepage, it says instant offer. So we have a QuinnGroup.com/instant offer page. Go there, you'll see that. If you go to Zillow's page and look at Zillow's instant offer, I simply just took exactly what Zillow says. It ripped every single look of it and duplicated it. If I'm going to compete with them, I'm a disruptor. I'm going to match and mirror very much what they're doing. Number one. Number two, I have these two little billboards I recently just put up that says, call me for an instant offer in your home. Avoid the showings. Skip the showings. People don't want to show their home right now for COVID. What do they want to do? They just want to sell their house without having to show it, right? So we're working with that. Now, are we actually buying properties through this way? No. Is it a tool? Is it a marketing piece that we can make the phone ring? Yes. And our method simply is, well, we have two options. One is, yes, I can give you an instant offer on your home today. Cash, close whenever you want. No contingencies, no problem. My investors and I will buy it, but we're looking at buying properties at 20 to 25, 30% below value. Real market retail value on the market out to the buying public is worth $500. If you'd like to sell it today with an instant offer, we'll offer you $350 and close next week. Now, that's an instant offer. Our ability to say, or we can come out and look at your home, do a market analysis, and we can bring it to market and see if I can get you other offers that will actually get you 150,000 more. What's better for you, an instant offer of 350, or would you like to get it on the market to get 500? Right? So are we using it? Yeah, we are, in that way. But we got to have that option because it is a disruptor.
And let me ask you real quick, when you started your second team that's out in Outer Banks, I'm just curious, Was that purely because a lot of people from your core market were buying second homes there, or you just saw an opportunity with some agents there that you formed this secondary kind of market?
Yeah, so it wasn't a natural thing where we were generating leads in another marketplace. That's how you normally would expand. You'd have your home-based business, and next thing you know, you start able to generate leads 30, 40, 50 miles away where you don't want to actually go there. Maybe you have a referral agent that you're sending to, and now all of a sudden you can actually put an agent in that location, or two or three, because you've naturally, organically maybe expanded out through a different method, right? That's normally how we would do it. The Outer Banks was a little bit different. That was an opportunity brought to me from a guy that said, hey, there's a company down there that wants an exit strategy on their sales team. They have rentals, and they have rental management, property management, but they had 20 some agents that don't do rentals, it's just a sales team, and came in and said, well, we know that you know the secondary resort market. That's a vacation home market as well. And they need help. They need your systems, they need accountability, they need training. Can you come in and help manage and get them going and support them and give them leads and, show them what you do, where you do it? And I said, sure. So we went in, we just merged that company in, and we more or less bought that business. And so it wasn't a natural thing that we expanded because of the leads or people are going there. It was just a business opportunity that we decided to get involved with to merge it.
I just started watching Outer Banks on Netflix, and I was like, man, where is this place? It looks really nice. So now I know.
Actually, so the Outer Banks of North Carolina, that show is actually filmed in Charleston, South Carolina. It's not even the Outer Banks. Not even the Outer Banks.
They tricked me.
You know the real answer is he liked the bars down there.
We all like having fun.
Yeah. Go ahead, Ty. Go ahead, buddy.
I was going to say, because I know we're coming close to I think we're a little over on time.
Yeah.
The one thing, and I want to just quickly address the disruption conversation. What I know about these three guys here is they are transaction engineers, meaning that they know how to go in and help somebody on so many different levels, whether it's a commercial property, it's a finance issue, it's a structural issue, it's an emotional issue, it's some kind of breakdown. So I know that the three guys here, these guys are transaction engineers and they know how to do deals. And the thing about disruption is this, like these three guys here, I think for any real estate professional, you want to make your skill sets and your ability to help people and care for people at such a high level that you will always have your niches. Mm-hmm. Now, I know Joe D is a master at networking because he genuinely loves his community, and he's out there to serve his community first and foremost. He has more business than he can handle. He has to have people on his team to help him serve that. Same thing with Alex, same thing with Jeff. And not only that, but when people have tough situations, guys like this, they know how to go in and handle and solve problems. And so even if an iBuyer or the disruption of, let's call it whatever, the new online brokerage, which I do believe is going to continue to gain strength. I don't think those things are going away. I'm not naive enough to say that. I see a lot of guys that are our age, or even a lot of guys that are older, that, they're going to run out of money. They don't know what they're doing. Well, they may not know what they're doing, but they're figuring it out, and they have a lot of money because they have Wall Street backing them. The real key out there is for people to really figure out, how can you be a problem solver and a transaction engineer? Mm-hmm. And how you can go out there and really serve your community at the highest level where you're in high demand and you can work your different niches. So with that said, we're going to go to closing comments, and I just really in a short brief, like for anybody here who's watching, Joe, like just two or three little things or something people can focus on leaving this conversation for them to go out. To me, it's the middle of the year. It's halftime, right? We got 4th of July weekend and a few days next week, right? So we're getting in that midpoint of the year. Still a lot of uncertainty in the market, COVID. We talked and we covered a lot of different things, Joe. What do people need to do? Just quick little thoughts. What do people need to do to be successful? We're going to go to Joe, then we're going to go to Alex, then we're going to go to Jeff, and then we're going to go to Beau to close this out. Joe.
I think the simplest answer is you got to talk to a lot of people. I mean, this business is a contact sport. Whether you're an investor or otherwise, you got to get out and you've got to make contact with people. And then I'd like to share, since I understand the audience is somewhat maybe a lot of younger people, this game is a marathon. It is not a sprint by any stretch of the imagination. The sprinters, they go as soon as the market shifts because they have not built their engine for the long haul. So look around, figure out what the successful people are doing, and start modeling that.
Love it. Alex?
The old saying, Mike Ferry always talked about as being a superstar. And I always thought about, do I want to be a shooting star or a superstar? And, the realities are, it's too easy to get caught up in what everybody else is doing versus what you should be doing. So we get caught up in everybody else's hype, and that wake of hype is a dangerous place. The waters get really rough. You got to really, really, really be clear on what you're after. And most importantly, just keep reigniting to it. And don't, I say this all the time. The noise is louder, the dust and everything is louder. It's more important now to take the next step, and then the next step, and then the next step. The journey, a walk of a million miles begins with the first step. Take the next step. Don't worry about sprinting there. Get there. The most important thing is to get there, not sprint there. So that would be my suggestion for anybody playing this game. If you're starting out, remember, if you say you're going to retire when you're 40, I'm going to tell you one thing: you're full of shit. Because the realities are, I'm 55 and I'm finally warming up to where I go, oh, those bastards are going to pay when I'm 80.
I love it, Alex. Jeff?
Yeah, we don't know shit until we hit at least 50, right? That's what I'm learning. And that's true.
True.
That's really true. So I guess looking in the short term, we don't know what's going to happen with this whole COVID thing, right? So one thing I would really, really, really share with the audience is write a business plan for the next 60 days. Mm-hmm. The business plan in which you write, if you've already written one for the year, that needs to be compressed and condensed to the next 60 days. You have 60 days left to complete your entire year. Okay, so I want you to think about, like, today would be October, right? 23rd. You got November and December, which is through September 1st. You need to build a 60-day business plan, because by September 1st, this shit may hit the fan again and shut us down. And it's likely that's going to happen. Okay, it's probably more likely than it's not. We don't know. This pandemic, you need to build your businesses, whatever kind of business you're in, real estate investor, whatever you are, developer, to be pandemic proof. Okay. But I think in the next 60 days, you need to right now accelerate, compress your business and save like crazy. Get cash right now. Get freaking cash. Get lean. Okay. It might feel really good right now because the market's good in a lot of our markets. It feels good. Like, this is amazing. Let's not get caught up that it actually is you causing it. Don't start to think that you are a hero and you're awesome, because you're not. Okay. Now, I'm not saying that in a way that you're not. I'm saying that the market is the market that's causing this shit, but it can turn off in a second. All right. And by the way, it did the last week of March. Okay. It turned off. This can happen again. So number one is, I think everyone right now, as you're feeling good, compress and get super hyper focused between the next week and the next 60 days. You got 67 days left, right? That would be number one. Number two, I would encourage everybody, no matter what their exercise is, to do that 4 quadrant, less of, more of, start and stop, and whatever it may be, let's do that. Last thought is, I think that, what's important to me is learning the communication skills. It's very, the skillful investor, the skillful agent, the skillful developer, the skillful person of communication is going to win, no matter if there's a disruptor or not. People are still going to want to speak to each other at some level. So just work on the skill of communication.
Love it. Great job, Jeff. Hey, I just want to thank the three of you. I want to give a shout out to the audience. Anthony Morrell was posting a lot and giving a lot of high fives to you guys. Hopefully you got to see that. Ali was also supporting the show. Also, Stefan from the accountability group. And then everybody else, we know there are other people out there. We love you. We appreciate the support. Tell your friends. So also, Jeff talked about skill sets. Tomorrow at noon, we do on Wednesdays, Joe D, myself, Alex comes on. Jeff, we're going to definitely have you on as a guest as well. Beau's on there as well. We do a skill-based, just a mastermind. It's called squadup.com, squad-up.com. You have to go there to register. It's actually a Zoom call, and we have limited spots. It's free. We don't pitch coaching. There's nothing there. We're not into coaching. That's not what we're doing. It's literally a mastermind. It's free to support everybody in the community. Our whole goal and outcome is to have the biggest, baddest ass community of people that are like-minded, contribution-based. That's how we've become who we are. The reason why, I have a high level of whatever it is I'm doing is because I'm spending time with people like Joe, Alex, Jeff, Beau, myself, and then many, many others that have really we continue to lift each other up. And that's what this whole movement's about. It's about lifting each other up. It's about community. It really is about community. We're here to cheer. We're not going to pitch you. It's all about community. So squad-up.com. You see it there, squadup.com. Join us again Wednesdays, 12 p.m. Pacific time. Beau, why don't you close us out? Thank you guys all. Thank you guys. Thanks, Alex, Joe, Jeff. Thank you, Beau. This was great, guys.
I really appreciate it, guys. And I think the more of, less of, start doing and stop doing. I was kind of working on that, but when Jeff put it out on the quadrant, I'm like, okay, this is just so perfect. So I'm going to take that. I'm going to go hang it on my wall. I'm going to implement today, and I really appreciate you guys taking the time, and I hope to have you guys back again. And maybe someday we could do a live event with these guys.
Oh, definitely. We're going to do it. Yeah. Big money, Jay.
Yeah, Q money.
Love it. So we are definitely going to do, as soon as this whole thing lifts, we figure out maybe in October, who knows, but we want to get everybody together for a free mastermind where we just bring everybody together. Thatch, Jeff, Alex, Joe, Beau, Adrian, everybody. We want to get everybody together, all the different guests we've had over the time. We want to get everybody together for a live event in person, like a one-day event, and then maybe like a party the next day or that night. So definitely plan for that. Continue, Beau. I'm sorry.
No, it's good. I was just going to say, I bought don't tell Adrian, I bought the domain squaduplive.com.
That's great. That's great. We're going to hijack it. We're going to point it to our site. So.
That's the summit. That's the summit. It's going to be in Las Vegas. Joe's going to be our tour guide. He's going to take us to the mob. We're going to go to like the here it is. We're going to go to Joe. Will you take us to like the private casino, the VIP areas that nobody knows about? I know I've been in a few, but I'm sure you know where all the really good old school Vegas places are.
We can make some calls. That's not a problem.
Okay. All right, guys. I'm not going to waste any more of your time. Thank you so much.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.